when I look out in 2 to 3,
Right.
4 years.
Yes, exactly.
$10,000 5 years ago meant everything.
Mm-hmm.
$10,000 today means some things. $10,000 5 years from now should mean literally nothing.
Right.
Hey everyone, I'm Morgan Debaun, a passionate entrepreneur and life advisor. With the Journey podcast, you'll discover that success isn't about the destination, it's about the journey. I'm sharing stories of amazing people who've taken control of their lives. Join me on my own journey to discover the secret sauce behind reaching success with permission from no one else.
Welcome back to the Journey podcast. I'm Morgan Debaun, your host. I'm so excited today. We are going to continue the conversation on the mindset from rich to wealthy. You all loved that episode so much that I have brought Adam here live in the flesh today in New York. So Adam, welcome to the podcast.
Thanks for having me.
I want to just give you a little bit more context for those who are catching up. I did an episode. It was just a solo episode where I was talking about my personal journey from my mindset around money. I've been I would call myself actually pretty financially responsible. I invested when I was 13. I bought Facebook stock and Tesla stock and Amazon and Netflix. And I had jobs most of my high school. I invested some, I saved some, I spent some. I went to college. I didn't have a lot of debt. I got a good job. I did all the basics that Dame Ramsey would tell you to do, right?
Mm-hmm.
And then I took a risk, which people would say was definitely risky, of leaving my full-time job at the age of 24 to start Blavity.
Mm.
And I went backwards. I actually went more backwards than I knew I was going to, because I was investing the money that I had into the business, and I had not that much income to live. So I was double dipping, double spending.
Yep.
So much so that I actually had to get a job back at Intuit as a consultant,
Yep.
because I was like, this isn't going to last in downtown San Francisco. Fast forward the first few years of Blavity, I kept my consulting job, and I hid it from my employees because I didn't want them to feel like I wasn't being focused on the business. But I kept that job so that I could continue to maintain some general foundation of money while not paying myself at the company. I don't think I really paid myself a real salary until, I want to say it was like year 4, which outside looking in, Blavity was really successful at that point. We had raised money, things were fine. We had employees, we had an office. But I felt like paying myself wouldn't have changed the outcome of the business, but having as much money in the bank in the business was going to change the outcome of the business.
Yep.
Being able to hire a salesperson, a video person, whatever. I knew that I had to make sacrifices financially, and I did that.
This is the journey. The problem is the romanticized version of being an entrepreneur is all based on survivorship bias. The stories we all hear are about the people that make it. There was another person who did the exact same thing you did on the same day and isn't here.
Right.
And I think that's one of the most important parts, is the life of an entrepreneur is not for the faint of heart. And it really goes more in a J curve of, you're going to go down, 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 investing in yourself, spending your money in the hopes that you get to come up. But you never necessarily have to get to bounce off that trough.
Right.
If it was a hockey stick, everyone would do it.
That's right.
What converts it to a J is daunting and scary, because just because you're willing to go down doesn't mean you get to come up.
Yeah.
And I think that, hearing parts of your journey is helpful for people, because again, it's those that survive and make it.
And I think that's what, you don't get that when you watch the TikTok clip,
Nope.
right? You just see the inflection point, but you don't see the dip. And also, because of social media, even if someone is dipping, you can't see it necessarily.
That's right.
Of course, there's always those people who are like, I lived in my car and da-da-da-da-da. But most people are pretty private about their wealth and their money and where they are and where they aren't. And so it was really when we raised our Series A, which was in 2018, that I said, okay, I got a couple million in the bank. We can, not I personal, Blavity Inc. has a couple million in the bank. I can and should be paying myself a salary because, one, I no longer have a huge, my equity got diluted, right? When you raise that kind of money, so I'm like, I'm an employee, right? So once I switched my mindset of ooh, I actually work for this board that I have all of a sudden, and I'm an employee, I need to be paying myself a salary and rebuilding the basis of my financial security. But that actually wasn't enough for me.
Mhm.
So at that point, I actually started my second business, which is Debaun and Co., because I knew that I wasn't going to be able to live the lifestyle that I wanted to live and the ease that I wanted to have through my income at Blavity. It was like, no way, right?
Mhm.
And so I started Debaun and Co. doing public speaking, doing advising,
Mhm.
angel investing, all types of things to try to diversify my income. And then I reinvested that initial set of money that I was getting to build out this other empire that was more, I call it my cash money,
Mhm.
like my liquidity, because
It's paying you on time.
it's paying me on
The equity in
time.
Blavity is gonna hopefully pay you overtime,
Whew,
and we
I
will talk
hope
about
so.
those 2 are
Yeah.
the only thing that money can do for you in this world,
And let's
and
actually
yeah.
talk about that because I think that is the framework that people, I looked to the comments, I talked to people after the episode dropped, and I just was trying to understand what was so appealing to them. I actually think what you just said is what we have to explain.
Yeah.
So break it down.
I think that the romance, using that word again, of early stage investing, angel investing is exciting,
Mhm.
especially on the heels of what went on in 2020 and 2021.
Right.
People are feeling a little different right now about that kind of a portfolio. And I know a lot of entrepreneurs that became serial angels,
Right.
and they're sitting on this portfolio of millions, if not tens of millions, that they
Right.
can't get access to. And a lot of them sort of screwed it up because they're worth 10, 20, $50 million, but they feel poor
Yeah.
every day. And that's strange. And I'm sure not everyone really is going to have pity when they hear those numbers, but that person has built a lifestyle and they have very few dollars working for them that pay them on time.
Right.
So we talk a lot about the fact that you need to have stuff that pays you on time, cash money flying into your account,
Yes.
not just fake marks that, by the way, you'd have to be a seller of an asset, sometimes at a terrible time to meet your lifestyle
Mhm.
and or pay taxes that you weren't expecting.
So let's talk about that because I wanted to say it back to people in layman's terms. So if you're a venture-backed founder, the majority of your wealth is in the equity that you own and your sweat equity and the equity that you've earned
Mhm.
as a founder. And your business is increasing valuation over time, although in this market, it actually, some people are decreasing, but for the sake of argument, let's say you're going up and to the right.
Mhm.
The only way that you can get money out of the business is through selling it,
Mhm.
selling some of your shares in a secondary,
Mhm.
which is in a private marketplace with a private transaction that typically your board has to approve.
Mhm.
When you raise a round of funding, another round, sometimes you can take some money off the
Yep.
table, is what they call it, take money off the table. But I will tell you, most Black people and most women founders do not get the opportunity to set those kind of terms and take
Mhm.
money off the table. So, if you're watching this, you're probably one of the others and you
Mhm.
probably don't have that opportunity. And then IPOing, I mean, there's been 20 IPOs, or 22 maybe this year. Kava just happened, so everybody's excited. But
Yep.
usually there's 300 plus, which is really still not even that many,
Mhm.
right? So M&A, you can do some M&A, mergers and acquisitions, if your company's being bought, but there's no guarantee when the company is even purchased that you're going to get paid. You're going to get paid last,
Mhm.
second to last. Your employees get paid last, second to last, depending on how it's set up. All the investors are sitting on top of you generally. And I think that a lot of entrepreneurs struggle with, wow, I'm raising this money, I'm growing my business, or people who maybe didn't raise money who have an empire of 6 or 7 restaurants
Mhm.
or have, 2 bookstores and this and that, but they don't have any cash.
Mhm.
How should they be thinking about the philosophy and their relationship to money?
Mhm.
And how do you, one, not feel so po, and also leverage some of the things that you might have?
Yeah, it's this tricky dynamic because to the world, there's perception of you being wealthy
Yes.
and successful.
Yes.
And what comes along with that is your life. So people around you, family, friends, sort of expect you to dip into the wallet when you're out to dinner.
Right.
Niece is having a birthday. What kind of gift are you supposed to give? Friends doing a marathon. How much are you supposed to donate? So I deal a lot with perception and reality
Mm.
and judgment.
Hmm.
And the problem is when you're wealthy but not liquid, which
Yes.
is where most founders I meet, that's where they are. It's how do you sort of judge lifestyle today? How do you deal with some of these issues? And that is where I try to coach folks that you've got a lot of people around you in your ear. not everyone is accountable to you and your family. In fact, most people are fiduciary, meaning they're obligated to do what's in the best interest of someone other than you. So your board member, they're awesome and they love you, but they're a fiduciary to the shareholders.
Yes.
Your investors, they're a fiduciary to the people who invested with them. They're limited partners.
Right.
I tend to play a fun role where I'm a fiduciary to you.
Yeah.
And so a lot of times what I try to coach founders is along the way, whenever you can take out liquidity, you should. And some people say, well, I don't get that. Why are you taking chips off the table so early? And I talk about the marginal utility of $1 today over your liquid denominator, meaning what's in your bank account. Does it have more value than having it in the future over the future bank account?
Right.
For instance, let's say you owned a business and you owned 20% of a $100 million value business. And you could take out $1 million right now, which is 5%. And $1 million to you right now would feel like infinity.
Right.
You pay yourself $100,000 a year right now. If you had $1 million in the bank, every dinner you'd want to go to wouldn't it be stressful?
Right.
A couple of cool vacations. You want to buy some cool sneakers. Like nothing moves the needle now of that denominator. It allows you to live the lifestyle. And yes, you took off 5%, but if things go well, whoever just bought the $1 million from you hopes that stock's going to be up 5x, 10x. And if it is, your $19 million will be worth 80, 100.
Yes.
And if you have 100 instead of 105, you're not going to miss it.
Right.
Because the $5 million, the utility on that 100 is zero. There's nothing you can't do that's different. Whereas the utility of having that million for the next few years to supplement your lifestyle, to buy those cool gifts, to help your parents that helped you, whatever you want to do with the money is so much more valuable from a living today, not just in the future. And so when we went through this liquidity cycle, I tell people I have no one who regrets selling, but I have countless who regret not. And I think the other thing is just the unitization of money changes over time where people like hear these numbers and, wait, it's not that much. And it all depends where you came from. And the world doesn't care what you have in your bank account. That steak dinner doesn't cost more because you're rich.
Yeah.
So suddenly you start saying, wow, this money would have so much more value in my pocket than it does on some cap table. So that is one of the things that I try to encourage a lot. And I would tell you, your investors and board members don't want you stressed about day-to-day. They want you hungry, but they don't want you stressed because they want you in it for the long term. Most of them are going to want you to go longer than you're going to want to go, which again is one of those natural tensions. So a little bit of a longer answer, but hopefully had some nuggets.
No, I think that's great. And I think that it reiterates the difference between, being greedy for something that's not guaranteed and understanding that money is a tool for how you live your life today and the choices that you make, what I call your wealthy choices that you do. So, people were all up in a tizzy because I said, if I got $10,000 today, I would spend it on giving it to somebody to do something that I don't want to do, which for me is perhaps cleaning my house, right? Or it's meal prepping, or it's, a night nurse for the baby. Not that I don't want to spend time with my baby. Don't you start with that. But what I'm saying is I will enjoy my life better having more help around me.
Right.
And that will give me more space and more mental freedom. That $10,000, to Adam's point, is incremental. It should be insignificant to my entire wealth when I look out in 2 to 3, 4 years.
Yes, exactly.
$10,000 5 years ago meant everything. $10,000 today means some things. $10,000 5 years from now should mean literally nothing.
Right. And that's the unitization of money issue is the biggest teaching I try to give, which is it's hard to unlearn our relationship to $1 or a $10 bill or a $100 bill. I remember the first time I saw a $100 bill, I was like, oh, that is a lot of money.
Yeah.
And it is a lot of money. And if suddenly your bank account goes up by a couple of zeros, a $100 bill might be a $1,000 bill or a $10,000 bill. And 5 $10,000 units can help a lot more people on this planet. It can provide you a lot more time. And it could just have a lot more impact. And it's hard when you start thinking about units that way. But the thing that I love the most when I hear the way you've been thinking about your relationship to money is that one of the things I thought about a long time ago is that the financial wealth isn't the game. Everyone thinks it's the game. It's just a gateway. It's a mechanism to access real wealth, which is pretty much getting up every day, doing what you want, where you want, with who you want. And I refer to it as time wealth, autonomy wealth, and health wealth. So using that $10,000 in a way that some people are like, but it's gone. You're like, yeah, and along the way, those 3 hours every week, this is what I did with it,
Mhm.
and I just made 20x my money on
Mhm.
that $10,000 versus if I just invested it in some random thing.
Right.
So I got back time, and time I was able to redeploy myself, and I'm the big growth driver of my balance sheet, not my money. And I think that's a
That's
big, big
key.
part is that yeah, you can
People
dive into that.
understanding that the biggest driver of your growth and your income and your wealth is you, your ability to lock in on your privilege, on your unique position in the world, on your insights in the world. For me, spending 2 hours doing laundry versus 2 hours reading a book,
Mhm.
which other people may say is just leisure. No, 2 hours investing in myself and learning and being a better leader and practicing different trains of thought is going to pay 10x more than folding
I
laundry.
even think, flipping it to what you've got coming up,
Yeah.
if you're hanging out with your kid for a couple hours, you're not feeling guilty maybe next week when you're grinding hard at a pivotal moment of your idea and your business.
Yeah.
And so I think there's a lot of nonlinearity to so many of these choices. But I know for sure that by using your wealth in some of the ways we're talking about, you know exactly what the outcome will be.
Yeah.
I think so many other things are sort of amorphous and they're really long dated. And again, I think it's just a matter of using money. And we talked about this a lot when we met. You want your money to be an enabler in your life, not a distraction.
Yeah.
Again, a lot of this is, rarefied air. And we're not tone deaf when we say that. And there's still a lot of people that can think this way.
Yeah. And I think it is a mindset. And I wanted to take a second to acknowledge there's a lot of things you have to do along the way to have the privilege to then make these
Mhm.
choices, right? Like, I didn't come out the gate at 22 years old talking about some, like, I'm gonna, no, I was eating oatmeal and boiled eggs and avocado with sriracha as my meals. And I was bringing Tupperware to work to get the free food because I didn't want to spend any money for years, right? Like, it's not an overnight situation, but also you do have the agency to make choices so that you can have the foundation so that then you can have the privilege to decide how you want to spend your
Mhm.
money. And again, there's all these books and things and stuff to do the basics, but I really think that there's so few conversations about what to do with assets and
Mhm.
wealth. And we as a generation, I call myself G1. Like, we're first generation
Mhm.
big money,
Mhm.
right? Like, my parents did well. My dad invests and does all the things, but that's his money. I'm not getting any of that. And
Right.
he's probably going to skip me now. It's
Mhm.
probably going straight to this one and my
Yep.
nephew. And so, I'm really first generation multimillionaire at
Mhm.
this age. I have no one to talk to.
Right, the analogy I came up with, and my background, my dad was a guidance
No,
counselor in
tell
the Bronx.
us.
Well, he was so yeah, I grew up one of three. I'm the youngest. My brother was 9 years older than me, so I don't really remember him when I was a
Mhm.
kid. Because I don't remember much before I was nine. My sister's 5 years older. Remember more, but 5 years older than me. Sister didn't really want to hang out with me very much. So I have somewhat of that only child element. My parents were both educators. My dad was in the Bronx for 31 years as a guidance counselor.
Mhm.
Then he taught at a Hebrew day school for 13 years, social studies. So my mom was a speech therapist. So I didn't even know what business was. My friend got into Wharton at a high school, and I didn't even know what that was.
Mhm.
And I learned, I was like, oh, I applied to Penn too, didn't get in. But I didn't even realize that there was this business school because I never really understood what business was. I sort of found a path into finance sort of by luck, sort of by smarts, some hustle. I
Mhm.
had an unusual resume, which we should do a whole resume thing because that is your biggest marketing project ever, and you're the product. And I
Mm.
think some of the smartest students spend the least amount of time on the most important project.
Mhm.
And you need that thing, that proverbial resume, to be universally appealing because you never know who's going to grab it. And I really became a person that was fortunate to get this opportunity. I worked at Merrill Lynch for 20 years out of college, was fortunate to be in some pretty cool spots. And the thing that I learned early on is just pattern recognition, be a brainstormer, but then look backwards and understand frameworks.
Yeah.
And I think that's what's allowed me to be successful is distilling pretty complex stuff into stuff that's bite-sized and relatable. I think that's what resonated with you
Mhm.
because I'll talk about things like, oh, well, that makes sense. That's like sort of plain language. There's nothing fancy. We're not using jargon. We're just talking about the purpose and the role of the money.
Right.
When I became an advisor, which was, now about 13, 14 years ago, sort of a career switch in my early 30s. I had two kids and just decided to do something that felt more purpose oriented. I found myself meeting with so many entrepreneurs in the New York tech ecosystem and sort of the 2011, 2012 vintage. So I was pretty early. People said, why don't you go to the West Coast? And I said, I'm decades late. Here, I think I'm sort of early. Plus, I had spent so much of my life on a plane prior, and I had kids, and I don't know, I just cared about time. And for a few years, I just was out and about, and I realized that I kept finding myself in front of entrepreneurs, and they didn't need me yet, if ever. But they needed a lot of stuff. And that was when I think I came up with really my biggest general framework, which is to live in your important and urgent box. Everyone's got important stuff, and sometimes it's not urgent. Is how do I live with you in the stuff that is important and urgent, recognizing it's not me necessarily, and or play air traffic control and get stuff into that urgent box. Because a lot of times people are like, oh, what you're talking about is interesting, but it's not urgent to me. I'm like, well, IRS thinks it is.
Right.
Or a creditor could think it is. Or you're getting married. Let's sort of have these conversations.
Yeah.
So I feel like I really positioned myself as a helper. It confused a lot of people for many years. People would be like, why do you want to do all this? And I took a very venture capital approach. But it's the same thing with me as you're talking about, is the survivorship bias. People will see what I do. And I'm like, yeah, but I used to do 1,000 meetings a year with nothing to show for it for years. Taking the early train, taking the late bus, missing it by 5 minutes, waiting an hour in Port Authority till 1 a.m. Not feeling bad for myself, but that's what I did.
Yeah.
No one
That's the
sees that
hustle.
anymore.
No.
My whole team that works with me, most of them didn't see any of that. They just see what it is now.
Yeah.
And again, I think it allowed us in parallel with so many entrepreneurs to go through that journey. I've seen so many entrepreneurs end up not making it. Some of them deserve to make it, and weird things with cap tables mean they didn't actually get the W.
Yep.
But a lot of times they got the W for the business and for their investors, but not for themselves. So there's a lot of coaching in this role, which makes it so fun. I just love what I do because, as I said, I think I really reorient people's relationship to money. Most people, if things go as well as they hope they're going to go and their investors hope they're going to go, the utility of money for day-to-day life goes to zero.
Right.
And then it's like, what else do I do with it? And if you take it out of your big account, I always say that if you poured it from this massive denominator in your bank account, and most people that you work with, no one knows how much money they have by heart past 3 digits from the left. So if you have $18,300, that's what you stop at. If you have 18.3 million, you also stop at the 3. But now you're rounding by $100,000 units. So my game I play with clients, if they can't tell me down to a unit what's in their account, I tell them they no longer have the right to keep it there. And we're going to go put it in someone else's account, whether it's a charity, a family member, and things like that. And I think people really enjoy that. Most people I work with are under 40.
Yeah.
They've got 40, 50 years left on this planet.
Right.
It is daunting to no longer have the money thing be a thing. And you're like, what else do I do?
Yeah. Who am I if money is not a thing?
If it no longer, like, there's nothing, any decision I used to make that was aspirational I can do on a Tuesday without thinking about it.
Yeah.
It's unfun.
I'm not there yet.
No,
My mindset is not there yet.
I get it. And so I think that a lot of the fun of this is, again, teaching people how to think about the money, how to be helpful to others. And it really is that type of a model. And that's why I think I've had so much fun in this role.
Yeah.
I embody it in a way that's typically not what people are expecting.
Right.
Which you might say, hey, the first time we talked wasn't really the kind of call I thought it would be.
No.
That's usually what most people say. I'm fortunate to have youthful genes, so people get a little confused when they sort of understand my background.
He is not 25.
Yeah, no, my oldest is 17.
Right.
So I joke, if you're 32 now, you're closer in age to him than me, which people that can do quick math can do that. And it's just, again, it's been an amazing privileged role. But what we tell the kids, because my kids are a little older than most of my clients' kids, is there's a lot of hard work, but then there's a lot of luck. And I think it's really important to, we can talk about you make your own luck. And I could agree with that. But I think it's such an important lesson that there's a lot of people that work hard in this planet.
Yes.
And they still don't land where others do.
Yeah.
So if you don't give anything to luck, you're being a little short-sighted. And
I
I
agree.
think it's really important because when we're trying to explain to them what's going on with us, and there's this really weird imbalance right now. I'll go on a tiny tangent, but I think it's important, is that most of us on this, or even a little bit older, when you grew up, you didn't know anything about how much anything costs on this planet. Like, you couldn't just Google everything. Zillow didn't exist. You don't know how much the house you lived in cost. You know how much a vacation was. Whereas your kids now, they know everything about how much you spend. There's no information that they can't get at. So what's interesting, though, is that when I was a kid, I had no, I mean, my parents didn't have any money, as I said, but like, I didn't know how much anything cost. And I also didn't know if they were donating any money, how much they donated. There was actually symmetry to the information. Well, now there's asymmetry. My kids are 17, they know exactly how much everything costs. So if we don't tell them how much we help others, they'll never know. So there's this weird imbalance right now, whereas if you're not going to be open with your kids about what you're doing on both sides, they're only going to know one. And I think it's really important to talk to the kids about, what you're doing to help other people, both formally, so like actual charitable stuff, and then something we've talked about, which is my favorite, which is random acts of daily financial kindness.
Yeah.
Which again is probably a whole other thing. But
Passing it forward.
there are daily interactions where you could change a person's day, week, or month by doing something above and beyond what they're expecting. And when you look at the totality of those small changes you make, it might cost you $1,000 a year, might cost you $10,000 a year. It's all relative to different people, but maybe you changed 100 people's weeks in a year. I mean, how powerful is that?
Yeah.
So I think the role that we've been able to play in our clients' lives is such an impact role, which people laugh when they're like, wait, you're not an impact cat. You make money for people. I'm like, well, it's not really a job. I mean, it's part of the job because you have to do something with the money, but doing something with the money is easy once you understand the role of that money and the personality. The investing part in my industry is oftentimes overcomplicated because it makes it sort of harder to understand. We sort of go the opposite, right? You got two things. It either makes money on time or overtime. And then what do we need from that money? How much do you need to live the way you want to live? Are you living the way I want you to live, which we push a lot of people? And then it's about what else do you do with it? And how can you get more value out of it? On a day-to-day basis, I find once people get past some of these amazing things they do for themselves, the joy you get out of helping other people and things massively trumps doing it for yourself.
Yeah. Or the $100 steak. Like,
it's crazy.
Yeah.
And I understand you don't know it until you're there, but once you are there, it is just, again, it's pretty magical because you literally go through your days helping all these people in ways, because again, you're taking it out of your big account where you don't even notice that $100 bill anymore, and you put it on someone else's pocket who did a really good job serving you at a restaurant, and they thought they were getting a $50 tip and they got a $150 tip. They'll remember it for a year.
Yeah.
And you don't even realize it.
Right.
And so therefore, again, you don't have the right to keep it in your pocket. Go put it in someone else's. And I think that those tenets resonate with people. And when, we help coach, and I consider myself more of a coach and a therapist, although Dana, my wife, hates that I call myself a therapist. More
You
than
definitely are a therapist.
Well, I always tell potential new clients, if you're not going to ever text me on a Sunday, which I guess I shouldn't say on something like this, then our relationship's not going to work.
Yeah.
Right. It needs to feel like an extension of your brain.
Right.
Not just hey, every quarter I got to get my teeth cleaned, because
No,
that's
you're not doing it justice.
No.
Our story from my perspective. So I just moved to Nashville. No, I think I met you before I moved to Nashville. Actually, I take that back.
Yeah, you did.
It was before I moved to
remember
Nashville.
when we thought about the house.
Yep. Yes. And I was talking to Michael Rothman, who is an angel investor of Blavity. And he also is a serial founder, really. He started a company called Fatherly, which is so cool, but it's been acquired twice. So he's always been like 1 or 2 steps ahead of me. And so I can call him. Like, I think he invested like 10, 15K. I mean, something small, but big at the time, but small relatively to our success now. But the most important thing that I've been able to lean on with Mike is to call him and say, like, I'm at this situation. What do I do? What should I be thinking about that it's not on my radar because I'm too in the weeds and I don't realize where we are in the life cycle. And one of the things that he asked me was, do you have a wealth advisor? And I was like, no, what are you talking about? Why would I have a wealth advisor? Like, bro, like, we just got here. You know what I mean? Like, I was just, I'm only 2-3 years paying myself a legit salary. I'm restacking. And he said, well, you should consider it. And usually people have to tell me like a couple of times. You should like, do you have a trust? And I'm like, a trust? A trust of what? Like, for whom? Like, what are we talking about here?
Yeah.
I knew that I was pretty ignorant about a lot of the rules.
Mhm.
And I didn't know there was a ticking time bomb on certain
Yeah,
things and
yeah.
certain paperwork you have to file back in the day.
Yeah, yeah.
There's just so many things that you don't know. And when we first talked, I feel like I then Googled 100 terms afterwards because I was like, what the fuck is this guy talking about? I don't know any of this
That
stuff.
doesn't sound so good.
Yeah, no, but you were saying normal things. I
Right.
just didn't know. I had no baseline and I had no one to talk to because even my founder friends, none of us have exited. What am I gonna do? You
Yeah.
can't Google this shit.
Nope.
It's ungoogleable. So that's when I said, all right, what are my options? And Rothman said, Adam, and in our first conversation, I learned so much. We then proceeded to set up the trust,
Mhm.
which was a really intellectual and philosophical conversation with myself
Yep.
and really weird conversations with my parents
Mhm.
because again I have no descendants. I'm not
Yep.
married. So my brother had just had a baby. My sister had just had a baby with my brother.
Mhm.
And so I was like, well, I guess this is our first trust fund baby. He gets all of this illiquid assets that mean nothing. And that was just such a fun process that I went through with my family. So that was step one. We're going to talk about the trust because that's something that a lot of people have been asking me about.
Yep.
And one of the reasons I moved to Nashville was because I wanted to buy a house and have a
Mhm.
home for myself. I wasn't sure if I was ever going to be married or if I was going to have kids, but I knew that I wanted to stop living as if I was waiting
Yep.
to get married and
Yep.
waiting to have kids. At one point in my life, I thought I should wait till I have a husband to buy our house
Yeah,
together.
again, the sequential nature of so many people's thinking, it's just you can't unlearn what you thought of when you were 8 in some weird
In
formative time.
Missouri,
Yeah.
So I'd like let go of all that stuff and I said, you know what? I'm gonna buy a house. I'm gonna stop waiting. I want to put up art on the walls. I
Yep.
want to decorate. I want to have a kitchen. I want to do whatever I want to do. Lord Jesus, buying that house was the most painful
I
thing.
remember getting the call from you with the mortgage. I was on a ski lift.
I cried so much during buying that house. And the reason why is because my wealth looks weird
Yes.
on paper and I'm in Tennessee.
Yes.
So I'm going to my regional bank, who I've been banking with since I was like 7
Yeah.
because my parents had a joint account. And they are like, you're broke.
Right. You have no income history. You're broke.
Your income
credit
history is
score's
like
not
this.
great. Yep.
Because even during COVID, I had stopped paying myself or just
And also, like, you were
things.
making money through non-W-2. You're doing your awesome biz, but
Yeah.
even still, they're like, well, that's not recurring.
Yeah,
Project
they
based.
totally discounted all of Debaun and Co.'s income from
Yeah.
my speaking engagements and the brand deals we were doing. I mean, in my head, I'm like, I can buy this house 2 times over.
Yes.
But like, this should not be so hard.
I always say what a bank says you can afford, and I can say you afford are not the same.
And that hurt my ego so bad. And then I also felt frustrated because felt like I didn't have any, like, who am I going to talk to?
Mhm.
I'm doing this all by myself as a woman. I mean, that was the other thing. It's not like
Mhm.
I had 2 W-2s
Yeah.
and
Mhm.
all of these different things. And so I remember one of the things that you told me was buy a house that you're going to be happy with, regardless of any liquidity outcomes, that you're not going to feel like you have to go through this process again and move. So stretch your budget as much as possible, which is a counterintuitive advice for other people.
Well, because if most people on this planet are W-2 earners,
Right,
but if
which
you're
is
an
a fixed.
entrepreneur, you're betting on yourself. So I need you to think that way, and
Yeah.
that is a counterintuitive way. A lot of times when I meet entrepreneurs, the only people they have around them are friends and family that aren't entrepreneurs. So they're giving them the W-2 earner playbook, which is every month you get a paycheck and you need to save a portion for retirement if you want to have kids one day and to buy a house. Whereas the entrepreneur mindset is I got to survive along the way because if things go as well, I'll beat a parallel path of myself by hundreds of years of normal earnings. And that's hard because that's not the normal mindset. And what I always say to people is, listen, it's an asset. And yes, housing goes up and down, but you're not eating the money.
Mhm.
You're living in it, and you gotta love where you live. Going back to our psychology, you gotta love where you live. Every morning, if you can, waking up on this planet in a place that gives you energy,
Yeah.
having a place to go home, having a place to entertain. It's really important. And again, rarefied air conversation, and something that is achievable. And I always tell people,
Right.
you don't have to own it. You got to love it. In your case, we were able to have an and.
Right.
And I think that is a huge tenet of this, because the worst is for you to feel successful on a cap table, feel successful in a meeting, and go home and you're like, am I still in college?
Yeah.
And that gets
And I
in your
live like
brain.
that.
And that gets in your brain.
Mhm.
And again, a lot of this has to do with the element of feeling great about yourself.
Yeah.
And again, it comes with risk. There are definitely times where things don't go as people plan.
Yeah.
But I don't like when people play in the second or third standard deviation of outcomes. And they
What do you mean by that? Yeah.
So if you think about, for all of us that remember some elements of math class, you've got these distribution curves of likely outcomes.
Mhm.
And 68% of the time, things happen within one standard deviation. And then 95% of the time, it happens within 2. And then 99 and change, it's 3.
Right.
And that third is like, my business fails, no one ever hires me again, and.
Mhm.
The likelihood of all of those things happening is probably that 1%,
Mhm.
but sometimes people overweight that 1% as a probability, not a very remote possibility.
Right.
So I try to live in the one standard deviation. Like, let's live in the meat of the curve of the likely. Like, yeah, if this business doesn't work out, you're probably gonna be able to get a job and make some real money. Now, the negative is now you're just an earner. Now you're just a W-2 person. You may not need me,
Yeah. Right.
which is fine. There's a lot of people that could be helpful because now you no longer have this thing that's your growth driver, that
Yeah.
equity in your business, but you still can afford your house.
Right.
You may feel a little oversized at that point, but most people are going to go after it again.
And I didn't
anyway.
buy like a mega mansion.
No, you bought a great home that, again,
4
checked all
bedroom,
your
5
I always tell
bathroom.
people, show me your list and give me a home that checks every box.
Right.
What does it cost?
Right.
And then let's go backwards to see if we have to start taking some of the box checks off. And I think that's how I try to coach people. And again, sometimes it ends up you're renting. And everyone was trained as a kid, rent is garbage. You're putting your money on fire.
Mhm.
Yeah, you got to live somewhere. And I don't agree with that. I actually think the optionality of renting sometimes is awesome.
Yeah.
I think the negative of renting is it rarely feels like you're home. And some of the things you said are the things people should hear is that you don't feel as great about furnishing it. You don't feel as great about putting stuff on the walls.
Mhm.
And I think that is something that I do listen to a lot is at different life stages, people want it to feel like a home in theirs.
Right.
And that sometimes means that buying is a way better option. But I think that inertial view of, hey, when I get money, I'm supposed to go buy a place, I try to really smash that idea because I don't actually think that makes sense for a lot of people.
Yeah. I think the framework of just thinking through 1 or 2 standard deviations, because there is oftentimes a disconnect between where you perceive yourself and what the reality is. And when people work really, really hard and then start to become successful, there's a gap between when you're successful and when you know you're successful and when you know that your risk levels have gone down. So if you had asked me at that time, I would have said, bro, like this is a lot, not necessarily that the house is a lot, but just some of the things that you're suggesting that I reframe my sensitivity to in terms of overthinking how I spend money, or overthinking, if I'm going to take this trip or if I'm going to buy the first class flight across, to Europe, like overthinking it and saving for it and budging it out and putting it in a spreadsheet, like, that I'm past that.
Yep.
And that my worst case scenario, if Blavity failed today, is still, I would absolutely be able to get another job, but I would actually probably make more money not getting another job.
My founders that have crushed it for their company sold it, but just didn't really have an outcome. Their next 12 months, they make like 10x what they used to make.
In cash.
Because everyone wants to pay them.
In cash.
Because everyone's like, oh, you're a winner, which they are.
Right.
And maybe their balance sheet doesn't feel, but what I remind people, there's a lot of asymmetry of that information. People don't really know what you get.
No.
I know what a lot of people got, and it's interesting, but I think that that's a big one, as you think about looking forward and trying to be mindful of, do I want to borrow from my future self to live today? And as I say, the mindset of an entrepreneur, most of the time they're going to do it. It's not for everyone.
It is
and that
true.
is, I mean, even my friends sometimes when I was like, no, I own a company. I don't, it's different. Like I have equity. You're an earner. At any given point, you can be fired. And then you don't have any equity.
And to your point, I buy a house. What I defined was my criteria was I want a house I want to wake up and dance in. I want a house that I could spend all day in. That I can go from this room to this room. I'm chasing the sun, and I'm fine. I'm so happy. I am content. And if this is my only asset. If all I do is ever pay off this house, that this house will also be a house that I can grow into over time.
Mhm.
And I remember even working with an interior designer, a Black woman out of LA, and being like, and this is going to be the room where I sit and watch movies. And this is going to be the room where me and Bay sit and he's working and I'm doing this, and like
Yeah.
just like really
Mhm.
dreaming of it. And I really encourage people as they're designing their life and they're designing their version of a wealthy life to dream that way, like dream in full color of what are you going to put on the walls? Who's going to be in the house? What do you want
Mhm.
to do with it? What do you want to do with your money? Who's with you? How does it feel? Because that then adds a tangible dollar sign and price point on what am I willing to do to get that.
Mhm.
And for me, the threshold was, am I willing to go back and forth with these very sexist bakers about my mortgage
Yep. Yep.
and explain to them my debt to income ratio is bullshit
Yep.
because you're looking at the debt from this company
Yep.
and my
Right. Because
income.
there's this weird dynamic.
If you own, what is it, over 20%?
Yep.
If you own over 20% of your company, then they look at the debt of your business, which is great. I own over 20% of my company. That's fantastic as a
Yep.
venture-backed
Yeah.
founder. But when you're getting a mortgage, that means they're looking at all of the notes, convertible notes and loans that you have to your income. And I'm like, well, are you looking at the income of my business?
Nope.
No.
Just the bad part, not the
Yeah.
good part.
So anyways, it was a mess, but we got it done and I cried my tears and I have a beautiful home that now has art and a man and all the things and a baby. So, that
And
was
you've had the
fun.
last few years of enjoyment of it.
I've had so much
You
fun with
weren't
it.
hurrying up and waiting. And
No.
I do think that again, this isn't the mindset for everyone, but I joke, I'm an enabler. I ask clients a lot of times like, "Are you ever going to say no?" I'm like, "Yeah, I'll say no if it's dumb."
Yeah.
I said, "But my version of what's dumb and what intuitively doesn't feel great are really different." And I'm very fact-based. I'm also
Yeah.
probability-based of what I'm saying. Again, I have pattern recognition. The big thing I remind clients though is that it's your one and only. I may have seen it 100 times. The minute I make you feel like number 101, I tell people, fire me. Because you want someone with pattern recognition, but you never want to feel like a number.
Yeah.
And it's very important to my team and to me that everyone understand it's their one and only.
Right.
And so, when we're talking about some of these things, I'm like, listen, if things don't go well, it is possible you got to fire sale that house. But the likelihood of that is that 1%. By the way, it's possible. And by the way,
Yeah.
through this cycle, I had a few of my clients that, they did go public.
Mhm.
And, a lot of companies did go down 90%.
Yeah.
And you don't really model that. Now, again, you could argue, going down 90% from what? Right? You still have real money in the world we live in. That's true. But for everyone's got their own versions of feeling broke. And again, there's not a lot of empathy for
Yeah.
different people. And I get
Yeah.
that.
Yeah.
And, but I really think that, again, leaning into this concept of, hey, if I'm an entrepreneur, I got to bet on myself.
Mm-hmm.
And living a certain way, and it's even sometimes it's just where you're shopping,
Mhm.
what you're eating, how you're vacationing.
Mhm.
Like you need to be recharged.
Mhm.
And there are these parts of that vacation budget where you're like, whether again it may be a first class flight because you're doing a five-day trip to Europe, and you're like, I don't know, I don't want to be tired as hell.
Yeah.
And yeah, I'm spending extra, and it's an extra $6,000, which is a lot of money. But you're like, in the scheme of what I think I'm paying for, it's irrelevant.
Yeah. Or I'm doing a cross country flight I remember when I started doing, if I'm going from LA to New York, I'm going to buy first class because my meeting is at 6 o'clock in the morning. I'm taking the red eye.
Mhm.
Right? My meeting's at like 8, but
Yeah.
I'm landing at 6. So I'm going straight from the flight to a pitch meeting.
Mhm.
The marginal increase of me not being tired, my sharpness
Totally.
is significant. This extra $1,500 to the business, this is my job,
Mhm.
me being at peak performance. But I remember feeling guilty for so long. And even when I just started upgrading,
Yep.
points and all this stuff. And I also remember getting judgment from my employees, actually being like, she's fast life, she's
Yeah.
spending the money. She's living large. She's flying first class everywhere. And I'm like, I am working my ass off to finance you. I'm not making any money. Like I
Yeah.
am building assets,
Mhm.
but this is so I can pay your salary on time.
Right.
And those types of trade-offs, I think, as an entrepreneur, and the guilt and the judgment and all of the things can
Mhm.
be just overwhelming at
Mhm.
times. So unlearning those behaviors
Mhm.
then to spend on yourself
Mhm.
is a whole nother mindset. So I hope that people are listening to this with like not guilt and no shame and no judgment towards themselves, but just accepting where they are in this framework and then deciding to take action,
Mhm. Mm.
I want to get to some questions that
Yeah,
people
sure, sure,
had
sure.
because I had them submit questions in advance. You guys know I love all of the feedback. I read everything. I shouldn't read everything. I actually stopped reading some of the comments on some of the videos because I thought people were being a little mean, but I loved that some of the things I was talking about was helping people reframe their mindset around wealth. One of the questions that came about just from the beginning is who needs a private wealth advisor?
Right. I would say at some level, everyone would love to have someone in their life
Mhm.
that could be an extension of their brain to help them think about anything financial. I think the hard part of our industry is how do you find a person where you're not an outlier, where you're not a one off,
Mhm.
and where they're not practicing on you? And that to me is so hard in our industry because most of the time, what happens, you just described it, someone you trust
Mhm.
sort of cleared the market for you and said, you didn't talk to 27 Adams. You
Right.
may have talked to several. You may have talked to no others because you're like, well, this my friend Mike, he sort of did that.
Yeah.
And so a lot of times what happens is people will go to people they trust and value, and then they will get recommendations. And what I try to remind people of, that works sometimes if.
Mhm.
And the biggest thing is that I would tell you that you care about source of wealth and stage of life, segment knowledge. Now, you could
Mm.
argue age too, but stage of life and age are correlated. So I'm 47, but I'm married 22 years with two kids that are 13 and 17. If you talk to someone else who has the exact same source of wealth as me, but is single,
Mm.
you're probably missing something, right? You're not going to resonate with really what is ticking in their brain.
Mhm.
So I feel like if someone's looking for an advisor in their life, they want to be right in the middle of their bell curve as the advisor. Meaning, if you're a high earner and you're in your late 20s or early 30s, you want to work with an advisor who has 50 of you
Mm.
so that the things that they're thinking about all day long always apply to you. And every question you ask, they've heard 50 to 100 times.
Mhm.
And so that's hard to figure out sometimes because in this case, the person you talked to had the same source of wealth. He was in the same stage of life,
Mhm.
essentially. So the person he had you talk to was correct. Where
Pattern match.
where there's a myth, where there's a miss is I'll give a good example. Like I have founders that live in Greenwich, Connecticut. Well, Greenwich, Connecticut is built of finance folks, hedge fund, private equity. So if someone in the Greenwich world asks one of their really wealthy friends, hey, what attorney should I use? They're getting the wrong attorney.
Mm.
And if they get the right one, it was by accident. Because that attorney who knows everything about hedge fund managers knows nothing about Section 1202, which governs the qualified small business stock QSBA. I'm ending up teaching the attorney.
Mhm.
And that's where you get a false positive. So I would say I like when people start with their network, people that they trust, but then try to layer on it not only someone that you trust, but someone that's sort of like you
Mhm.
or understands what you are. Then when you're talking to that advisor, I think you want to understand what they think their role is in your life.
Mm.
And I think that's where you quickly, like I'll get on the phone with people and we'll talk for the half an hour and they're like, wait, we didn't even talk about money or investments. I'm like, because that's not the conversation. I need to understand what makes you tick.
Mhm.
I need to understand what makes you excited. And I want you to want to call me.
Mhm.
And by the way, I also want to like you.
Mhm.
Two-way interview, which is an important part. You want to look for an advisor that feels like you're in the meat of their curve. You want to feel like they're not practicing on you. And this is, I think, the hardest part is it's very rare an advisor would say you're too big for me. A lot of advisors would be happy to say you're too small for me.
Yeah.
But it's very rare, and a lot of advisors should say you're too big for me because they've never dealt with the problem.
I want to be your poorest client. I want to be she didn't really make the benchmark, but we're going to let her in.
Well, and I will, so I know you're joking, but the joke I also say is never work with someone who you feel like is doing you a favor.
True.
Which is a miss also because, again, you don't want to be an outlier. You don't want to be a one-off. You really want to be in the meat of their curve around source of wealth and stage of life. A lot of advisors aren't quite willing to be as narrow because people they don't want to lose out on all the periphery of opportunity. A real advisor that's focused is going to actually be pretty narrow, like I am, where I only work on a certain type of client because everything I spend my time on matters to all my clients.
Yeah.
And when they ask me a question, it's highly unlikely I've never heard it before.
Right.
So I think that when people are thinking about, do I need an advisor? The answer is, in essence, everyone would want an advisor. I would say that when an advisor earns their keep, it's way more than just investing your capital. They're helping you think about how should I think about this home? How should I think about this vacation? How should I think about my kids?
Mhm.
How should I think about my parents? How should I think about charity? How should I think about my money?
Mhm.
And really being that extension, that to me is when an advisor plays a role. If all they're going to do is talk to you about, hey, I'm going to manage it this way, then you can use a lot of awesome platforms that don't cost a lot of money,
Yeah.
and you have a DIY model. And I actually think that that's fine for a lot of people, because I think that it's hard a lot of the stuff that you and I work on are the things technically I don't get paid for, and they're not scalable.
Right.
I can't scale our conversations.
No.
It's time. And I think that's the hard part of the industry, is that most of the time people are looking to do the most scalable thing possible that you get paid for, which is just manage your money.
And there's a high level of trust too. Like, I don't think I've ever asked, like, what is the portfolio going to look like? Like, I'm like, that's actually not, we will get there and all the
We'll
things,
get
but that's not where we are, right? Like, it's actually, okay, at some point there will be this large, ridiculous outcome. And how should I be thinking about asking for raises? Or should I be selling some shares on secondary? Should I be, thinking about an exit, or is it too soon? Just from a Morgan Debaun selfish
Yeah.
money perspective, not the founder, not the chairperson, but the person, the human for my life, right? And those conversations, to your point, are very difficult to scale because it's based off of all these variables that are unique to me, and also impossible to Google. And I think that's what I really want people to understand is, like, there's personal finance advisors, and to your point, there's DIY things. You can get the index funds, you can do your 401k.
I mean, one of my clients is the founder of one of the biggest robo advisors out there,
Really?
because
The business.
his business is amazing, but
Yeah.
that's good for his stock portfolio, but that's like a tiny part of his whole life.
And that's my point, is like, it's actually your investment portfolio is a fraction of actually what you're really thinking about when you get to a wealthy stage. And that's the part that nobody tells you, frankly, until you're there, or it's too late and you're like, "Brr."
And I think when you're looking for an advisor, or thinking you might want one, if you're just focused on, hey, is my investment return going to beat quote unquote something?
You've lost.
Then you don't need an advisor, because
Yeah.
that's just the game you want to play. And if you find advisors that want to play that game, I'd argue that's not going to last very long, because someone might beat the quote unquote market over some random time period, but that ain't going to last.
I agree. I think that if that's the game you're playing, then you're already it's a different.
An advisor should know what matters to you as you're looking at the next question. Matters to you, and figure out a plan, again, that gets you there with the least amount of stress.
Yeah.
That's the role of the money once we get to the money part.
Yeah. Okay. If you don't have referrals, if you're like, I'm the most successful person in my network, then you need to join more networks. It would actually be my advice, was like, join more groups, and be proactive about joining industry groups, joining coaching programs. There are so many resources on building networks. YPO, Young Professionals Organization. If you are a 9-to-5er, which we're going to go into 9-to-5ers in a second, then typically you can talk to actually people who are more senior than you,
Right.
understand what they did. I have a huge audience listening in that are tech professionals.
Yeah.
So they are people who are high earners, typically dual income households.
Yep.
And both high earners. And so, they're doing over $1 million a year.
Yep.
And they get these really cool, every quarter they get, should I buy the stock?
Yep,
Should I
yep.
keep the stock? Do I sell the stock? And some of them are even, job hopping enough where they're catching some IPOs.
Yep.
Maybe not this year, but like have and probably will. How should they be thinking about or evaluating wealth advisors? Like, what should they be thinking about?
Yeah. So it's an interesting role to be in when you've got this income that for a while can seem recurring, but it's actually not. Meaning it looks
The stock.
regular. No. Let's say you're earning $1 million a year between you and your spouse. You could get lulled into thinking that's sort of forever on your timeline, when you're like, wait, I don't own a company that makes $1 million that I can control. I'm just a salaried employee at will. So I think when you're an earner, you have to be very nervous about spending versus a business owner that has sort of that equity pop and then obviously control over their income. So I always tell earners they really need to understand, what do they need in the bank? And it's way more than most people think. I mean, if you're making $1 million a year, it means that you're keeping about a half a million, depending on where you live,
Mm-hmm.
which is 40 grand a month, which is a lot of money.
Yeah.
But most people that do that, you start having what's called lifestyle creep,
Mm.
right? Because you were probably at one point making 500,000, then you're making 7, and then and then suddenly you're saving, even if you're saving 10 grand a month, 110 grand, you're like, it's pretty good. To make 500 grand after taxes, you probably need, I don't know, right now, I don't know, $10 million. It takes a long time to get to 10 million if you're saving 110 grand a year. I think a lot of times people don't realize how much they need in the proverbial bank by what age. So I think when you talk about advisors, by the way, that's also where an advisor could earn their keep. If they could really help you understand your if-thens, like if you want this, then you got to do this.
Right.
And understand the math of the spending, the math of inflation, which no one really cared about inflation until they did.
Yeah.
And now everyone's like, oh, inflation's insidious.
Right.
I mean, it really eats away at purchasing power.
Right.
So I think that that's a super, super important thing to think about as an earner is, hey, if I'm an earner, how long do I have to work? How long do I have to get up every day and do this thing called a job? And I think and remembering, like, I don't control the job, you can get fired. And a lot of people at great companies have lost those jobs.
Yeah.
So then let's talk about the stock piece.
Right.
So, you work at, really storied, big mega cap tech companies, that starts feeling like, the Kool-Aid. You're just like, hey,
every quarter
I get a refresher.
Yeah, people are
I
out
get
buying
more.
Gucci, buying all types of
Right.
stuff. I'm like, okay, guys, I don't think this is the answer.
So we'll talk about two things with this. One is, man, you'll meet someone and suddenly they got $5 million at Google, $10 million at Amazon, because it's
Yeah.
where they worked for a decade, 15 years.
Right.
And you look at them and be like, if you met me and you had $10 million and I told you to put all into Amazon, what would you do?
I'd be like,
They'd be like, I wouldn't talk to you. I'm
Yeah,
like, right.
well.
But because it got put to you, when I'm telling you to diversify, you're going from 100% down. So if, let's say you sold 50% of it, you're like, look at that, I diversified. I'd be like, but if I took all your money and I said, I'm going to put 50%, so we're going 0 up to 50%, you look at the 50% differently.
Yes.
So mental anchoring for people is a massive impediment to making good decisions. So when
Yeah.
stock is put to you, even when I see founders, they get bought by another company and they get the company's stock, I'm like, who cares? They're like, well, but I think it's going to, I'm like, what do you mean? Sell it all.
Yeah.
You don't control it. It was put to you. You would never have taken the cash if you did a whole cash deal and then bought their stock.
Yeah.
Yeah, mental anchoring is weird. So I think that as a high earner that's got the stock, sell the stock every time you can. Stop saying what you think it's going to do. You're going to get more in the back of the truck every
Yeah.
quarter. So sell, because idiosyncratic or one-off company-specific things happen. We all know the examples, whether it's Lehman Brothers, and so all these companies where people thought they had millions of dollars and it went to 0, which, by the way, they do not have enough time on the planet to make it back. So when cash is in your money, cash is in your pocket, no one can take away from you. When it's this other thing, got to be really careful. The other thing that people need to be careful about is there's a lot of weird rules that sometimes change from company to company that if you get fired, what you got to do with your options.
Right.
And that's one of the biggest issues that exists right now in the tech world is you typically have a really short window that you got to exercise all these options. When
And
you
exercising your options means that you are buying the equity that you have earned by being loyal to this company, but you actually have to purchase those shares. Typically, it's at a discounted price, so you feel good about it, but it could be hundreds of thousands of dollars in cash that you need to have in a 90-day window or a 6-month window, but you just got laid off and fired. Why would you spend all your cash?
And if it's a private company, you can't sell it.
Even worse, yeah.
And then you
Yeah.
pay the taxes on some of the way these
Yeah,
things
they're not
get.
giving you a loan for
So
that.
and again, the fintech world, as you would imagine, there's opportunity and they've birthed companies. So there's definitely a lot of fintech solutions for that. But I would say the high earners at tech companies, again, the 2 things or 3 things I find is you get lulled into thinking that that income is forever. You get lulled into owning a lot of your company stock, thinking it's the best thing on the planet, which it may or may not be, but I know for sure that if you convert it into cash, you've got way more optionality.
Yeah.
And then lastly, I think that if you're sitting at a company accruing a lot of options, just be mindful of some of those rules if and when you were to leave on your accord or the companies.
Yeah, and I think the philosophy on mental anchoring is something that I also had to unlearn, that I even had that habit of, to your point, just to say that example back, if somebody gave me $1 million and said invest it, there's no world under the sun that I would put even 35%
Right.
in one thing. And actually, it happened to me recently because I had a bunch of Tesla,
Yeah.
and then Tesla popped, and it has continued to pop.
Right.
And I was talking to my dad about, my portfolio, and he was like, "What percentage of your portfolio is Tesla?" And I was like, "Oh, but like it's because," he's like, "You got to sell it. Like you like take some money out and diversify." And I was so proud that I had, this thing that really appreciated and all this stuff that I like, it hurt me mentally
Mhm.
to sell it because I was like, "Oh man, I'm gonna get taxed on it." Like, all this stuff. I'm calling my account like, "Yo, like, how do we feel about these taxes this year?" And then I actually did think of you and I said, "Oh, this is mental anchoring."
Oh, yeah. We are going to say for your listeners here, I'm a little upset. I don't think we've had this conversation until
What?
now. Sometimes I find clients compartmentalize some of these things.
Right. Like I only think about it as it relates to, yes, I probably
Think
am
about it. It's
guilty.
funny, right? Because it's money you're playing around with, which is
Yeah.
probably real money. But because it's now, it's different than, yeah, you're like, oh, no, when that happens, we'll be engaged.
Yeah.
And, it is interesting because, right, there's that mental anchoring plus, it might become a great donation candidate, to help negate some of the tax this year. And again, use that money a different way.
Hmm.
So, but it is mental anchoring is the downfall of most people's relationship to money.
Mm.
And again, I think a good advisor will help untether some of those connections we all make in formative
Right.
years. And they're normal. I mean, how could you not? But I do think that again, sort of, weaving together some of these conversations, I just think a person who gets you
Yeah.
and and help you sort of again unlearn, untether. Even in my life, I mean, Dana talks to my team, not me. I'm her husband. What do I know? And that's helpful because she, as we've gone through our own journey,
Yeah.
it's really helpful for her to talk to people.
Right.
And again, I would just say that I watch the earner thing. I'm telling you, do a model with an advisor. Look at
Yeah.
what you need in the bank. I think sadly the number's way higher than people realize. I mean, you got $1 million and you're 70 years old, it's going to generate about $3,000 a month.
Right.
And you start backing up the years, you're like, wait. I'm going to live a lot longer than I thought. And like, wait, how much do I need by 55, 60 years old? And then you're like, wait, I have no
Or I
path.
want to retire early.
Yeah. Or right. Or you might think, wait, I don't need nearly as much as I thought I did,
Hmm.
especially if I live here. Oh, wait, I just need to grind for 5 more years.
Yeah.
And then, and be disciplined along the way. So
Yeah.
that to me is one of the most helpful things of having an advisor, is helping you run these models of like, what do you really need?
And I would say that skill set, I'll say it, is that like, that's actually not that sophisticated. Like you can find, there's tons of wealth advisors that are
Agreed.
capable of doing this. And because there's technology now, like half of them are not even doing it themselves.
Totally.
They're using
Mhm.
some sort of, white label technology solution. So I think the key is to imagine your lifestyle, envision what you need and by when, and then have someone help you work backwards
Mhm.
from there. That's
Mhm.
like really important. How do wealth advisors make money? A lot of people thought they were like, "Oh man, you must be spending so much money on him." And I didn't say anything. But how do wealth advisors make money?
Right. It's a great question. The answer is, unfortunately, it depends.
Yeah.
And I think this is an important thing as people are looking for advisors, and that depending on where they sit, there's different standards to which they're held.
Right.
And that doesn't mean that you can't be sitting at so there's a fiduciary platform, which is sort of what I'm part of, which means you have to do what's in your client's best interest.
Yeah.
Now I say that out loud and people are like, isn't that like, doesn't everyone do what's in their best?
No,
And no,
legally.
they legally might do what's suitable for you. So it's a different standard. And that doesn't mean that someone who has a suitability standard governing them can't be unbelievably amazing and highly ethical.
But this is a question that you should ask, is actually understanding those. Are you legally responsible to do what's in my best interest or what's generally suitable?
Correct. And then I think the other question, and again, it's sort of the question to ask, but answering your question, which is, how do you make money?
Mm-hmm.
And so some advisors make money just based on the advisory fee you pay them, which could be a percentage of your assets or it could be a flat fee.
Yeah.
That's the only way they earn compensation. And I would say most of the time that's the easiest structure, and it is definitely the least conflicted structure, because you're like, okay, so like I pay you 10 grand a year, I pay you 100 grand a year, whatever
Right.
it is, that's the only way you make money.
It's like an accountant.
So if
Yeah.
if I go do these other things that cost money, you don't get a commission or a kickback from anyone. And the answer in a lot of places is no.
Mhm.
That being said, there's a lot of types of advisors you can talk to that if you do a mortgage through them, they get paid.
Mm,
If you get life insurance through them, they
by a
get paid.
product.
And that doesn't mean they're bad advisors.
Right.
And it just means make sure you understand the motivation.
Mm-hmm.
Sometimes there's products that big banks, investment banks, and brokerage firms will position that you actually get no fee. Hey, Morgan, it's free. I'm not charging you my advisory fee, but maybe I'm getting paid 2% from the firm,
Mm-hmm.
which again, you might be fine with, but you just want transparency. And then unfortunately, if let's say your advisory fee is 1%,
Mm-hmm.
and then on this investment, I'm making 2%, you might be like, well, did you do that because you think it's better for me or just
Yeah.
because you get paid better?
Right.
And that's where when having different structures of fees, having abilities to get paid other ways, it's hard. And, a big deal when we started our own firm years ago, I wanted to be able to answer the question you just asked with, it's this,
Right.
not it depends.
If this, then this. If this,
And it's
yeah.
very easy. And I think that is important. So because I deal a lot with asset protection for founders because they build up all this equity,
Mhm.
and you know this, and it's something that like it's illiquid, but if you get sued or if you get divorced or you die, there's people that think that money's worth something.
Yes.
And so there's a lot of ways to protect, and some of those protections are insurance. And I always have to say very quickly, I don't make any money on insurance. I only make money from you.
Right.
If we decide that we want to work together, I only get compensated by you. And I think that's really, really important. And it's funny, like if you ever look at an email from me, it actually is talked about as my compensation structure, not my fee schedule.
Yes. Yeah. I think it's such an important question because it helps people understand the incentives and not get stuck in a situation where we see this in the news, right? You see celebrities and athletes who wind up in terrible situations because they didn't ask these questions and they trusted someone and then they wound up not having as much money as they thought they did,
Yeah.
right? Down the line, and somebody else got rich along the way.
Yeah, I think the other thing is by having a structure that is so pure and easy, like sometimes clients will be like, well, I don't want to invest in venture. I just want to, I want to invest in the lowest cost thing. And I'm like, okay. And I don't make any more money or less money if you do a venture fund or you buy an S&P 500 ETF.
Right.
And if I'm recommending the thing that has a higher fee that I don't receive any of,
Mhm.
why else would I be doing it unless I thought it was best for you? Because we're all
Yeah.
going to look at what the return is after fees and after taxes.
Yes.
Why would I possibly put a higher fee thing in that's now a burden
Fixed cost.
to that
Yeah.
if I don't make any money?
Right.
It's because I think it's what's best for you. And I do believe that coupled with being able to talk about insurance and trusts and mortgages where you're not getting paid through that,
Hmm.
I always say that the most listened to voice comes out of the least financially incented mouth,
Yeah, I agree.
right?
And
Like,
typically, it's this most simple rules are the rules that you want to play by. If
Yeah.
you've got to say, well, let me get out the chart and the spreadsheet, and if we do this
yeah, if
and
we
this
do
and
this,
this
it
and
costs
this,
this. If we
I'm
do
like,
this,
oh man, I'm out. This is too much.
No, it is, and unfortunately, the industry does have less homogenous ways of getting paid. There's some advisors, you look on these lists, and it's weird. Like sometimes if you look at advisors' assets and their revenue, you'd be like, wait, how much do they charge?
Yeah,
And it's it's
that's how
sort
I
of
feel about my 401k.
Yeah,
Where I'm
yeah.
like, what am I paying? I don't have a choice, but I'm like, why do I pay this for this? Can I take this money out? It's a problem for another day. All right, a couple quick questions. Okay, somebody asked about a single family office versus a multifamily office and one are the best solution for investors. And I was like, I don't even know.
So it's funny, if you've met a family office, you've met a family, meaning a family office is this sort of amorphous term of typically a wealthy family, and we'll
Mhm.
talk about what that means. They build their own team that could be anything from either ors or and with accounting, philanthropy, investing, direct investing where they're owning their own stuff like properties and companies.
Mhm.
And so you find that what happened was, wealthy families, and let's use the B, like billionaire families, like, oh, I've got a few big brokerage firms, I have maybe an independent firm, and I'm paying X a year. Would it suit myself to bring this in-house
Yeah.
and have a staff of 15 people and pay payroll?
Mhm.
And do I think that that's going to be better? And I think a lot of what people really look for at a family office has migrated less around the investments, because let's be real, the likelihood of your billion-dollar family office having more clout and access than a hundreds of billions, if not trillions.
Right.
No, that you want niche stuff, so you want to be nimble, but like it's unlikely that you and the 3 people that work for you are seeing enough flow.
Mhm.
So I think where a lot of times a single family office is interesting is on the non-investment pieces.
Mm.
Sometimes the philanthropic planning and coaching, sometimes it's the management of household staff,
Mhm.
dealing with private aviation, dealing with security,
Mhm.
dealing with
When
your
we're talking
taxes.
wealthy, the person who ever asked this question, you're fine, my friend. You're wealthy.
Right.
These are like
Now the multifamily offices, which is what my business is
right.
where you're dealing with families that are very wealthy by any human standard, right?
Mhm.
Richer than anyone most of us ever even thought we grew up with. They've got several houses, they got all the nice stuff. And that you can get at in the 20, 30, 50, you're rich.
Mhm.
And you definitely can't hire 15 people to come just work for you.
Yes.
Nor should you. And what they're really looking for is the soft stuff. It's, hey,
Yeah.
I've got 3 houses. I don't need someone to pay my bills. I can set up auto pay, but like I need to make sure that like my water bill isn't ridiculous at that house I'm not at as often. Like, am I getting ripped off?
Right.
Is the gardener really coming in and cutting my lawn 3 times a week?
Yeah.
And so I want someone to check my bills and then pay them. So that
Yes.
that becomes time, going back to what we were talking about. I
Mhm.
think tax prep becomes a big deal for people where they, taxes are not only tricky, but they're laborious. And the tax prep market is a weird market where no one I work with likes their accountant usually for more than 3 to 5 years.
Mm.
And it's not because there aren't a lot of amazing accountants. It's because the industry is weird where you see them every year, if not a few times. So it feels like a version of me.
Mhm.
And you don't pay them that much most of the time. You pay them 5 grand, 10 grand, 25. And so think about how many of you they need to make any real money.
Yeah, they get busy.
So then suddenly like, wait, my account's got 500 customers. What's the likelihood they're ever thinking of me proactively?
Yeah.
And the answer is not that likely.
Right.
And so that role tends to be a tough one
Mhm.
where the profession's almost set up for failure from a service perspective.
Right.
So if a family office or a multifamily office can integrate your tax
Mhm.
with your advisor
Mhm.
and your investments, then it feels like a much more ongoing proactive tax advisor
Right.
than a reactive tax preparer.
Yes.
So I think that kind of stuff.
And I think that's actually a key thing that people are going to say, "Oh, you know what? I only talk to my accountant after the fact, like after I've already had the year and now we're going through my taxes." When what's really to your benefit is talking to your tax accountant throughout the year about what's going on and them giving you advice along the way.
And or an advisor that is willing to take the time, again, not technically getting paid, to
Yeah.
talk to Jay
Yeah.
and saying, hey, this
Jay's
is
my
what's
accountant.
this is what's going on.
Right.
And are we good on this, right?
Yeah.
On your behalf proactively.
Right.
So a lot of times a good advisor can actually bridge that service gap.
Yes.
Because we can think about you all day long proactively because we don't need nearly as many clients.
Right.
And then we, knowing your overall advisory team, can do that. So that's the big
what team that somebody needs? Because now we've revealed I have you.
Yeah.
I've got Jay, who's
Yeah.
my accountant, and he does my personal accounting and my Debaun & Co. accounting because it's all connected. And then who
You
else
got
are we
Dan,
missing?
Trust Estate.
Man, Dan I pay. Dan does the trust, and Dan was actually super helpful because he's like a very traditional lawyer, so he's very cut and dry. He's like, if you die, what? And I'm like,
Yeah. The decision trees we go over on the estate planning side aren't very fun.
yeah.
We talk about a matter of fact. So
Yeah.
so I think you typically you'd like an advisor, and we'll talk about really the role an advisor can play versus what they usually do.
Mhm.
You need someone to help you with your tax advisory. You need someone to help with your basic estate planning, sort of orderly disposition of what happens. I joke, if you don't have a will, the state you live in wrote one for you, and
Ugh.
you rarely like it.
Yep.
So depending on complexity of life, you want to draft your own. And then after that, you have people that are a little more episodic. You usually have insurance advisors, both on life insurance and liability insurance. You may have someone that's helped you do some loans.
Oh man, liability insurance, all of those. I forgot. I blocked out all of
But
that
let's
stuff.
talk about part of why Morgan forgets, and I'm going to say this as a little bit of a plug, is that versions of what I do for a living that are able to truly be architects of your plan, not just coordinators.
Yes.
Being an architect of a plan is very different. So I architect in a way where I know everything that's going on. I have line of sight into every dot of Morgan's life. I joke that you cannot connect the dots that you cannot see. most people who do this job don't have the time or interest in seeing everything. So what happens is they say, oh, I do estate planning. Morgan, go talk to Dan. So
Yeah.
now Morgan's on her own. She's talking to Dan. Hey, go talk to Jay. And those people only know what Morgan remembers to tell them in the 27-minute conversation.
Right.
Because they don't have institutional knowledge. And they're doing this work for hundreds of people.
Right.
And so as you think about tying this back to the advisor role, you really want an advisor who acts like an architect, not just a coordinator, because then they have line of sight, they understand the blueprints, and they understand how everything interacts with itself. And as you said, you don't need to remember who your liability insurance provider is, who did your mortgage, even though that was painful.
Yeah.
You just need someone who's helping you know you need all these things.
Right.
Either doing them or actively ruling them out, or come up with an if-then framework, and then the coordination. So I think that it is important to coordinate, but to just coordinate, I think, is table stakes.
Yeah.
You really want someone who can be your architect and really build this plan that's interdisciplinary across everything.
Yeah.
Multidisciplinary is too siloed still.
Right.
You want interdisciplinary, where people are like, oh, wait, you're buying a house. Okay, we probably want to own it in an LLC for a little anonymity. We're going to finance it, but we're going to do it this way. And we got to make sure that we understand the insurance because you're near a lot of fires right now.
Yeah.
We're near earthquakes. And let's make sure we understand that.
Right.
And that's an advisor. An advisor is helping you not only understand all of that, and then helping you place all that. And then once it's in place, making sure that the maintenance of it. Exactly.
Yeah. I always forget to pay certain bills. And I'm like, hello, would you like to keep this insurance? I'm like, oh, yes.
Right. Yeah. Part of the gig is to be the gentle thorn in the butt.
It is a huge blessing and a privilege to have all of you guys on my team. And I think that more people in our community, in the Black community, women founders and entrepreneurs that want to have multi-generational wealth, want to pass down assets, cash, businesses to their family or to their friends or to their university, whatever, whoever is the recipient of their wealth. We wait a little bit too long. It feels really intimidating because you're just like, what? This is a lot. This is a lot.
It is a lot.
Everything that we just talked about is a lot. I'm sweating.
You're like an expert by this point, but it's a lot of topics.
It's a lot of topics while running your business.
Yeah.
You're doing this while you're fighting the good fight every day. And I think that my advice to people when you feel overwhelmed and it feels like, where do I even get started, is the key is to actually just start, because a lot of times the really good folks in your life, these advisors, they know each other actually, and they have good experiences and bad experiences, just like you do with your colleagues and people who you work cross-functionally with. And so you lean on people. People want to help, and something that feels labor intensive and difficult and things that you're procrastinating on is somebody else's job that they love.
Well, what people misunderstand is a good advisor is going to put you in reactive mode.
Yeah.
On all the things, there's no chance you're going to be proactive on anything we talk about.
No.
And if I say to you, I need 6 hours of your life for the next 6 weeks, can you give me that? And by the end, we're going to be done. You're like, oh, okay.
I can do that.
I could do that.
Yeah.
And I say, we're going to do a lot of work in between those hours.
Yep.
And we're doing this aligned with the goals. So it's not like a one size fits all. Although, again, there's some things that are going to be core to what we know we're going to need.
Right.
I think that also helps, especially in the founder community, which, is where I spend all my time, is everyone's spending 150% of their brain on the biz.
Yes.
And they a lot of times have 99% of their wealth in the biz. So they need someone else thinking about them in a way that's aligned with their goals, and also in a way that suits their lifestyle. So, they need sometimes weird times of meetings, and sometimes they want no choose your own adventure answers. They're like, can you just give me the ABC?
Yeah, that's
I don't
me.
need the open-ended.
Just tell me
what
to do.
Tell me what 99% of the people do.
Yeah.
And then I'll pick one of the three.
Yeah.
And then we'll go from there. And I think that's the thing that you brought up, which is important, which is getting started matters, because sometimes I'll ask people to send me a list of 6 things and they can't find the 6th. So they don't send me the 5. Right? It's like, no, just give me whatever you got and we'll get started. And like the other thing, so I think a lot of times people are optimizing for perfection.
Yeah.
And they should be optimizing for some type of progress. Yeah, exactly.
Always progress over perfection, 100%. I live by that. It's 80-20 rule.
Yeah.
Okay, so I feel like this has been really productive conversation. I think that a lot of people listening to this maybe it doesn't fully apply to them. They're not a venture-backed founder, or they are an entrepreneur, or they are a high earner, or they aspire to be.
Mhm.
And so my hope for everyone who's listening is that something that we've talked about applies to you today, whether that is challenging your mental anchoring
Mhm.
on money, on understanding the life of cash and how it can play as a utility in your life, as opposed to something that is to worry about and think about and stress about, that there are people who can help you think through these different things, and that it does require a team. Like, you're not supposed to do this alone. And frankly, the most successful people don't do this stuff alone. I mean, like, no one, right?
Mhm.
And as quiet as it's kept, because it's an uncomfortable conversation, the more that you share your vulnerabilities of who you want to be, where you want to be, what you can envision for your life with other people, the more likely you are to get there,
Mhm.
because they're going to help you. And I promise you, they have seen everything under the sun. Anything that you're embarrassed about, no matter how long you didn't pay your taxes, or how much you owe so and so, or how much you lent to something that you're never going to get back, like, they have seen it all. There's no shame in the game. And in fact, it probably makes it fun for them.
Mhm.
And I just really hope that people who are listening decide to take action and start to, let's do something about it, as opposed to worrying and freaking out,
Yeah.
and then having money be something that isn't a joyous tool in
Yeah.
in their lives. Any other final words?
I would say, again, I think understanding how to use your money the way Morgan's saying is important.
Yeah.
Understanding that having a team in your life is awesome. Just want to make sure the team is aligned with what you need. Don't get bogged down by necessarily what you need to pay. Get bogged down on what kind of value you get.
Amen to that. Well, Adam, thank you so much. Friends, do not go and reach out to Adam, but really look for somebody who's right for you, unless you're in that specific space that we talked about. But look for someone who's right for you, that you're in that bell curve for them, and someone that you trust and that you want to spend a lot of time with for a long period of time, because a good relationship with your wealth manager is someone who is going to have your back through the ups and downs of the markets and life events and all types of things that are never really going to happen in your life. So I'm so grateful to you
My
to
pleasure.
have you. Thank you.
Awesome.
Thanks for listening to the Journey podcast. If you enjoyed this episode, make sure you leave a review and head to our Instagram and YouTube to leave a comment. I look forward to hearing how this podcast has made an impact on your own journey.